Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Monday, January 7th, 2019, and this is the Daily Report for gold and silver. On dollar weakness, we do have stronger pricing in both gold and palladium today, with silver and platinum trading lower on the day. First to gold, trading just 10 cents under $1,290 per ounce, currently up $4.10 at $12.8990. Silver is showing declines today of about 0.6% or a net loss of 9 cents, currently at $15.69.5. Platinum also trading fractionally lower on the day. I'll actually put this in the unchanged column at $826.70. And lastly, palladium up 0.44%, $5.40, gaining distance on gold once again, currently at $1239.80, very, very close to current pricing of gold. Now, this all with some pretty strong tailwinds provided by a weaker U.S. dollar. You can see the dollar closed down about 0.5% and is currently fixed at 95.25. This due to strength in both the British pound as well as the euro dollar. Euro up almost 0.75% at 1.147. Now, U.S. equities today did fare better today, and when we look at the leading gainer, that would be the NASDAQ Composite, now up 7 out of the last 8 trading days at 68.21. Dow Jones Industrial Average, that gained about 0.4%, 23,531. And lastly, Standard & Poor's up almost 0.75% at 2549. Traders, even though today's recovery is modest, up about $4 on the day, and the fact that this recovery or upside move is really primarily due to dollar weakness, it still makes me extremely optimistic about a continuation of the current rally that we have in gold. The rationale behind that is if we look at Friday's action, that single candle had a tremendous range. The high went right to our current level of resistance, the first level, which is at 1,300. And as I am on record, I do believe that we have a band of resistance between 1,300 and 1,312. The 1,312 comes from a 0.23% retracement, and that retracement is from the shorter of the two data sets. And it begins when gold hit a bottom at around 1,160 up to the multiple tops approximately at 1,370. And traders, the Fibonacci retracement that we're using right now, I've compressed the chart so you can see the beginning point, which occurs in December of 2016. 1124 is actually the lows that we start from up to these multiple tops that occur at around 1370. What I'm finding of most genuine interest is the moving averages, because this accelerated rally that we have seen really since about the middle of November, when gold was trading at approximately 1217 up to this current top, which occurs at around 1300, is we have the 50-day moving average moving closer and closer to the long-term moving average, and that creates the strongest of the golden crosses when the 50 crosses above the 200. Of course, at the end of November, we had the first occurrence of a golden cross, and that occurrence really was when the 50 went back above the 100-day. Realize that as this market sold off from 1370 down to the initial low at around 1160, then moved up, traded sideways, and started what I call this stair step to higher pricing. It wasn't until this cross that we went from a slow and methodical move to the upside to a much more accelerated move to the upside. We can certainly see this when we enlarge this chart in terms of the tact or the angle at which we have seen this recent rally grow to. We have our first golden cross right here, and at that point we really have this acceleration of the market moving higher. higher. Now, we are still sitting long from approximately 1268. Our stop is just above that at about 1270.13. And as I said, I am looking to move that stop up this week. Right now, I'm looking at the possibility of moving it either to 1280 or 1275.13. And that, of course, is the 0.38% retracement of the sequence and time dates that I just showed you. And traders, as I said, even with a modest recovery that we saw today, the entire market move to the upside can be attributed to a falling US dollar down about 0.5%. And currently trading at 95.24. When we look at our daily charts, and I'm going to enlarge this in a second, we can see that the market definitely hit some resistance just prior to the 0.618% retracement, which occurs at roughly 97.75. And most recent action has moved it below a pretty critical area, which is the 50% retracement at 95.90. We'll call it 96. We can really see that when we enlarge this, in that today the market opened under the 100-day moving average and is really headed towards the 200-day sitting at 94.50. But what is interesting to me is how last week is really when we saw this breakdown first occur, because about midweek we had these highs that came in which were just under the 50-day moving average, and we saw on Thursday and then Friday of last week the market get closer and closer to the 100-day moving average right here. But it wasn't until today in which we actually saw the price of the dollar relative to its basket of currencies open below the 100 and close well below the 100-day moving average. I would look at current support, and the potential of this drop right now could go as low as, call it 94.50, and that would match up with a couple of things. First of all, the 200-day moving average, and it would also match up with this low that came in back in October of last year. And this break that we have seen over the last 3 trading days is absolutely signaling the real strong probability that we will see a further decline in the dollar index, and a pretty significant decline at that. Lastly, I do want to take a look at palladium, because palladium pricing continues to get closer and closer to that of gold. Now, if you recall, a couple of weeks ago, we pointed out a very, very simple pattern called a tweezer tops. Tweezer tops are simply when you have equal highs in the market. We did that off of a weekly chart. We can absolutely see that we have had some real resistance in that area. And then we had that pop on Friday, a $40 rise in the market. And at that point, I really believe that we kind of flipped the coin, whereas $1,200 per ounce was absolutely resistance in palladium. I now believe it is support. The other thing that I find interesting is take a look at the high that we had today. The high came in at $1,249.40. We are absolutely getting some sort of resistance at about $1,250, in that over the last 2 trading days we've had these equal tops. It's a little bit too early to tell. We did close significantly higher on the day, $5.80 in terms of gains. And we also have palladium prices quickly honing in on gold pricing. And when we look at the differential between the two, we don't have that much more. Call it $50 in terms of the price differential per ounce between an ounce of palladium and an ounce of gold. Traders, my recommendation is to maintain your current long position in gold, to maintain your current level of stop placement. And as I said, we will look to raise that up to the areas that I talked about earlier. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.